Yo, what's happening? You can throw that in it. Toaster right there. Dang, I almost hit that one. Yo, so Schedule C time. I warned a lot of people about this. It's time to do them taxes, right? So, alright, I lost internet connection, but I'm back. I'm back like I never left. So, my phone keep ringing. That's why I keep disconnecting. But, it's my baby calling. She won't answer on this other phone. But anyway, Cricket Wireless. Nah, my phone keep ringing. My baby, my 3-year-old keep calling, but she won't call on this other phone. And I keep sending her the voicemail to keep calling from this phone, but she won't answer. So, god dang, I'm gonna burn it up. But anyway, like I was saying, on this whole Schedule C thing, I done told a lot of people about this. You know, I'm like, establish, you know, you need to have a business account, and your money need to be going in your business account, and you need to be writing yourself a paycheck. Because this the time where a lot of people, when it's time for them to do their taxes, they like, well, how do I do my taxes? It's my first time doing business taxes, and I don't even know how much I made, because they spending everything like it's one income, basically. You got your social that identifies you as a person. You got tax ID that identifies the business as an entity. Two separate things. This entity pays you. You work for this entity. When you just go spending all the money, guess what? You're going to end up getting taxed twice. Because you're going to pay taxes with the business and you're going to pay personal taxes. So, here we go. Hold on. Hey, the phone ain't working. I can't see y'all. Hey, baby. Baby. Hey, I'm gonna call you when I get to the house. I'm almost at home. Hello? I know, baby. You got me on pause. I'm gonna call you when I get home. Yeah, I'm almost home. I'm gonna call you. Hey. And she probably gonna call back. But look, so like I said, you're gonna end up paying taxes twice by doing it that way. So if the money came into your business, yeah, exactly, Rigo. If the money came into your business and you wrote yourself a paycheck, no matter if it's every day, every week, every month, every quarter, it does not matter. Now, you actually have a record of how much you paid yourself. Yeah, you're right. She ain't trying to hear it. You got a record of how much you paid yourself. Alright? If do it that way, you're gonna end up running into a lot of problems. And if you're taking this to a CPA to organize, they're gonna charge you a whole lot more money, because basically they have to get all your stuff together for the whole year and then break it down piece by piece, which is gonna take them some time. So that's why I tell everybody, write yourself a paycheck, and you can do like a weekly direct deposit if you want to, just to make it easy. So the money that your business is making go into your business account, and then you do like a direct deposit from your business account to your personal account every week. It'll be just like working any other job. So that way, and another thing that will help, when you pull your bank statements out and give it to your CPA or whoever your tax person is, you can get them that, and they can just go down the list. Okay, you paid yourself this, went in your personal account, boom, 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 straight from your business account. It's easier for them to prepare your 1099. And when you keeping up with all your business expenses throughout the year, so not only you keep up with your receipts, but if you took every week or 2 weeks or every month, just say, let's say a month, just to make it easy. Every month, if you went down your list of expenses and you wrote it out on a Excel spreadsheet, you typed it in, your different expenses. So now you can calculate, you only got to calculate it 12 times, one for each month. All right, now when it's time to do taxes on, I think it's line like 19 or some crap, right? I don't remember what line it's on. That's where you add your expenses and you subtract it from. So if your company made $200,000 for a year gross and your expenses added up to, 92,000, then you'll pay taxes on the 108 that's left. So, man, these young kids so high. They are tripping. They are tripping. But anyway, that's how you go about doing it. Like I say, when you don't do it that way, you end up running into some major problems. You also need someone who knows tax strategy. Facts. And one thing to keep in mind, you definitely want write-offs, but you don't want so many write-offs to the point that you're not showing to be extremely profitable. So what I mean is, if your business is your primary income, and say you wanted to buy a house, you wanted some type of rental properties or whatever that you plan on financing, you're not gonna buy outright, which means you'll have to get a conventional loan for, because you can't get a conventional loan on rental properties. You can't get a FHA loan on rental property. You only get an FHA on the property that you're living in. Any other property, you're gonna have to get a conventional loan, and I think it's 20% you gotta pay down. So any type of other moves you want to make, basically they're gonna show your debt to income ratio high, and they're gonna start denying you for a lot of stuff. That looked like a freaking wolf. Oh, that's a dog. But like I had to do with my dad. So that's what I mean. When you put down too many write-offs, it basically shows that you ain't really making no money, and you'll start getting denied for a lot of stuff. So it's a fine balance. So you, like Rico say, you do need a tax strategy person, like a CPA, who could maneuver those avenues for you. So I got spreadsheets that I do. I just send them to a couple people that I'm cool with, and basically, like on mine, it's got like all my fixed expenses at the top, like truck note, stuff like that, truck note, insurance a month, cell phone, blah blah blah. Then from the first day to the last day of the month, I got the load number, I got the date, the load number, how much the load paying, how many miles it's paying, if I pay, how much I spent on fuel that day, how much I spent on tolls, parking, showers, meals, etc. All this on my Excel spreadsheet. So all I gotta do is fill it in daily. Boom, spent this much, spent this much. At the end of the month, it's easy to calculate. But if you know what you're doing on the Excel spreadsheet, then you can have it calculated for you. All you gotta do is set the worksheet up to where anytime you type it in, it automatically calculates this for you. That's some same boys right there. Boy, I don't even want to be next to them, 'cause they tripping. So that's an easy way to keep up with your books. And then, of course, organize your receipts and keep it just in case you get audited. But, yeah, man, for the most part, that's it. But if you take that paperwork that I'm telling you, that Excel spreadsheet that's got all them expenses calculated in it, and you put that in your tax person hand along with your 1099s. So if you run your own authority, you're going to get a 1099 for every company you ran the load for. And so if you put those 1099s with the Excel spreadsheet together, it would line up. And your bank statements or credit card statements that you're using for the business. If you give that to them, a lot of that stuff lined up. All they got to do is basically go down the list and boom, 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 mark a lot of stuff off. They don't have to go through this piece by piece and break this down and charge you more money because you've done the work already. So I've been trying to save a lot of people if they listen. You know, matter of fact, Rico, I'm finna call you because you got some info you can help them, like with how to write off a portion of their house if they using it for office, different stuff like that. So, Rico, call my other phone right quick.
What's happening, Cap?
Golly, man, it sound like you are next to a freight train.
Man, you know this old Ford ain't got no DPF on it no more. That's some Tice back there talking.
Yeah. Hey, so look,
I'm going uphill.
Alright, I got.
If I go in and out, it's because I'm coming through the mountains of Vermont.
Alright, so I got you on it live, right? So break down the writing your house off, a section of your house that you use for office space.
So it's a specific federal code. I don't remember the code. I don't remember how much space, but you have to have a certain amount of space that you have dedicated to an office, in-home office. I can't remember the square footage or whatever, but it's a certain amount of square footage space.
Yeah.
In my house, it's a section in my basement. I got a printer and a laptop computer down there that I don't even use. But it's there, right? So if I remember audited, they want to come see it, it's freaking there. But a certain percentage of the house by square footage allows you to write off a certain percentage of your mortgage by a dollar amount. Even if you don't own the home, if you're renting the house or renting an apartment, you can still do the same thing. Yeah. Matter of fact, if you're renting, if you don't own your home and you rent a property or renting a house or renting up a space, you can't write that off anyway. So you need to find ways on how to give yourself some of that tax relief back anyway. But yeah, you can do stuff like that. Anytime you buy clothes. Heck, I just bought some thermal socks yesterday because I came up here to Vermont and it's supposed to be -4 degrees in the morning. But I use my business account. It's a business expense. Mario, you and I have met together and I bought you guys lunch.
Yeah. I
use my business account. That's a business expense. You can actually write off trips that you take. Like when I come down to Louisiana. Yeah, when I come down to Louisiana, there are times that I stay down there for more than just the 1 or 2 days I'm down there for my load. But because I'm coming down there, I basically have a plan. I planned on coming down there, right? So I've communicated with the shipper or receiver, or in this case, a receiver, me coming down there. So that shows my business communication. So basically, from the time I leave my house to the time I come back to my house, I write off all the expenses down there, even when I went and bought that gun I bought last time. You know what I'm saying? So all that's a part of a business account.
Yeah.
Or business expense. So there are different things you can do to kind of help you benefit on giving Uncle Sam some of the tax dollars. The difference between a business owner who's the employer and the employee is that employees look for tax returns. Business owners just pay taxes and we keep our money anyway.
Yeah.
So we give Uncle Sam what we select that he or she is allowed to have based on how we're spending our own money. An employee, their money is, remember, employees pay. We pay, a business owner pays a payroll tax for an employee, and then the employee receives that money back in a return based on what they write off, right?
Yeah.
Well, it's opposite for us. So we get a chance to see more of our gross number than an employee who only sees their net number.
Yeah.
If that makes any sense.
They really don't.
But yeah.
An employee really don't have control over it.
They don't have any control.
As a W-2 employee.
Even when they're filing their taxes, if they don't know how to identify various write-offs and get various tax credits, they're not even getting any of their money back. As far as the percentage. Remember, employees pay more in payroll in taxes than the business that they work for.
Facts.
So, but the business owner pays his taxes up front. Man, we pay our taxes every quarter.
Yeah. So.
But there are different things you can look at. I mean, there even when you file state taxes, I mean, it goes to federal tax, but even when you're doing your state taxes, there are different things you want to look into, various depending on what state you live in, what county you live in, what parish you live in. There's different things you can do. I know, like the area I live in Maryland, there are different taxes based on you owning a business in that particular county.
Yeah.
So just when it comes to tax strategy, when I was talking about tax strategy, I meant don't go to H&R Block and expect them to know what they're doing when it comes to what you're doing.
Yeah.
But you got to go to someone who specializes in businesses and filing business taxes, because I know business owners who spent a friend of mine. I remember when he spent probably close to $200,000 towards the end of the year, so he didn't have to pay $300,000 in taxes.
Yeah, my sister had to pay.
He bought a piece of equipment.
My sister had to pay like $88,000 in taxes one time from basically just making too much money and not having enough write-offs.
So that's where the tax strategist comes in play, because there are various things that you can do, from leasing equipment, buying equipment, renting space. I know people who do, like, if you think about it, you got companies that have a big Christmas bonus, right? Or a big Christmas event.
That's a write-off.
Yeah. That's a write-off.
Yeah. So let me ask you this: if you're renting an office space, and that rented office space is a write-off.
It's a write-off.
But also
correct. But
if you got renter's insurance on that office space,
that's a write-off.
Yeah. So
yes. Those are all business expenses.
Mm-hmm. So,
even the interest you pay on some of your purchases, like, again, like you own a home, you can write the interest off on your personal taxes. So there are various things that you can write off. The biggest thing is just knowing what you can and how to properly do it. And if you don't know, having someone who you can rely on, who's doing that research to find out, because tax codes change every day. I mean, every year. We just saw that recently with the most recent administration.
Yeah.
Tax codes change all the time.
So like I was saying, a lot of times, well, most times, get with somebody who know how to really do it, but because you don't know how much to write off. Because they can create a lot of stuff for you to write off. But like I say, if you're trying to buy a house or something and you got so many write-offs to the point where it look like you only made $40,000, then guess what? You can't afford it. Per this paperwork, you can't afford it.
You're only going to afford what you can pay for $40,000. Correct.
Exactly.
You could have probably grossed $300,000, but based on the numbers, you only got $40,000 to play with.
Yeah.
So therefore, you can't really qualify. So you want to. It's really, like you said, it's a balance, right? But what I always tell people is you gotta have a paper trail. You gotta document everything, because at the end of the day, the more information you can provide whoever's helping you, the better they can help you. If you're relying on them to gather all your information, man, you done already set yourself up for a loss, because they don't know what you do every day.
For somebody who on child support, this is gonna be the best thing, because when you run yourself paychecks, then your child support is gonna be based off the amount of money that
But
you
you
pay
make
yourself.
it correct.
So if you don't want to pay
not what the amount of money the baby mama said he got.
Exactly. If you don't want to pay $1,200-$1,500 a month, your child support gonna be based off how much you pay yourself. And if you ain't paying yourself properly, like you work for your own business, then guess what? They can find ways to manipulate the system to hit you.
To identify all. Yep, they're gonna look at everything now because you're not giving them what you want them to look at. You're just saying, hey, look at me. Remember, you control a lot of your situation.
Exactly. So long as you keep your personal and your business separating, your business pay you a paycheck, you can only be you only have to pay child support on that. Because you gotta remember, your business is a separate entity than you are. So you need to keep it separate. When you start blending it, you're gonna be paying way more in child support than you need to be paying.
Well, if you ever think about people who typically, and this doesn't go for everybody, but some people who typically have a trouble or hard time running a successful business is because they commingle funds.
Exactly.
Their business and their business pays for the person pays for the business. You can't rob Peter and pay Paul.
Facts. You got to keep it safe.
Remember, in trucking, all right, so example, in trucking, you and I had this conversation about how my hot shot recovered a bad week for my big truck.
Yeah.
But it didn't pay for the expenses of my big truck. It just helped the company for that week.
Yeah.
You know what I'm saying? Like the big truck didn't do good. So the big truck was at a loss.
Yeah.
But the hot shot was not. But again, I didn't take money from what the gross of the hot shot made and say, well, I gotta use this money to put fuel in the big truck. No. If the big truck didn't make enough money to cover the fuel for the week, the big truck did that. Yeah. Same thing and vice versa my hot shot, because guess what? I pay a $22.90 on the big truck. I don't pay a $22.90 on the hot shot. So therefore, they're two separate entities. And I got to treat them as such. Now, they're under the same business. They're under the same umbrella, but they function individually.
But you know what a lot of people try to do? Well, what you saying? What they'll try to do, if one of the trucks is doing bad consistently and the other one is doing good, they'll keep robbing from the one that's doing good to try to sustain the one that's doing bad instead of terminating it. It's not working. You got to let it go. You can't.
You gotta let it go, or you gotta focus on trying to fix the problem. Remember, if it's not working, you gotta figure out what's wrong.
Yeah.
Facts. Now, what's wrong could be the driver, the equipment, the lanes, right? The product that's moved. If the truck that's running is running a regional area, but that regional area has more volume than a dry van, but you running a 53-foot low pro step, guess what? You need to change up.
Exactly.
If you really want to start seeing what the business can do or what that truck can actually do. But again, you're right. If you're not looking at it, if you're only looking at it from the bird's eye view and never looking at it from ground level, and you got to be able to look at it from all levels, right? So
you're gonna overlook the problem every time.
You're gonna overlook the problem every time because, again, you can do something wrong for your whole entire life and never listen to people saying, "Hey, that's the wrong way to do it."
Yeah.
You never listen, but then you don't realize it was wrong until it's too late. Well, you can't recover at that point.
Yeah, facts. So
right. So it's like when I had somebody ask me about when I got into my hot shop. They were like, "Well, did you buy a string ride trailer?" No, I researched the lanes I wanted to run for over a year, and I bought the trailer that was going to benefit me in the lanes.
Yeah, man.
Bought a 40-foot air ride.
Hey, we gon' cause we getting on a different topic right now. Matter of fact, let me put this in my notes. Nah. I'm gonna put this in my notes because, God dang it. Can you hear me?
I can hear you just fine.
Yeah, I'm gonna put this in my notes because that topic actually has to do with something else I want to talk about, and I don't want to blend the two. So hold on, let me put this in there.
Bro, it's cold over here, dog.
I bet. That's why I don't go over there.
Man, it's supposed to be -4 degrees tomorrow. It's 19 degrees right now.
Man, you crazy. Alright, so I just put this in my notes, right? So basically, what that conversation is gonna be part of the next live, which is I'm gonna piggyback something off of it, which is a conversation I had with somebody earlier, and that's, if you got a truck in your personal name that you're using for business, and you want the same tax write-off as a business, would you refinance it in your business name, or leave it the same, or just get rid? We don't want to talk about it now. I'm just kind of giving you, I know. We'll talk about that later, because that's a really, really important topic, or really, really important topic. Because when it happened to me, I made a phone call. I talked to my banker. And when she ran down some game to me, I was like, nah, I just ride it out. And this been in the past, but I was just like, nah, I'm gonna ride this one out, because from a businessman, if you really know business, you'll understand it's not a good move. And it don't have nothing to do with, well, I got a year left or 2 years left, let me just pay it off. Nah, because a lot of people, and this is what I was going to talk about earlier, a lot of people don't understand. And just to be honest, I'm just being honest, I only can speak for the black race. A lot of black people have it bad saying, hey, I own this, I got a title to this mine. Other people leasing, they ain't got their own, blah blah blah, and they don't even realize that they are in certain situations that they're hindering themselves by saying, hey, I got this, I got that. And not to go too deep in the conversation, but if something happens, somebody can come take that from you. Ain't nothing you can do about it. Nothing. Ain't a thing you can do about it.
We live in a country where people go to college to sue people to take
sue happy. So all these people bragging, man, I got this, I got that. I mean, that's good. You want to own some stuff, but just keep in mind, a lot of people don't have them layers of coverage, and somebody can come take that. Somebody can take it.
We definitely gotta have another
conversation. We gonna have a deep conversation on that, layers of protection. Hey, we gonna name the next video layers of protection. So yeah, man. All right, Rico, I'm gonna call you back in a little bit.
All right, bro.
So look, that's it for this video. We got some 5 topics. Exactly, it's what you want. It's what you want. So we got some 5 topics we gonna talk about, and I might do another live later. You know what I'm saying? Because I got some stuff I want to talk about. Me and Dirty Bro got a live we got to do too. So, man, I'm gonna get with y'all. Y'all be easy.